All right, welcome back. Can you still see my screen?
Yes, doctor.
Okay, fantastic.
Yes, I can see it.
All
Yes.
right, thank you. Thank you. Thank you. Okay, so the next thing we're going to do, and this section, like these other questions um, for finding the after-tax operating income and net operating working capital, I have covered these in my previous recorded lectures. So if you have any question, I can go over this again. But for now, we're going to skip it, and I will jump on to taxes, which I haven't covered in the previous lectures. Now, um, when you file your taxes at the end of the year, I mean, most of the people do it through the accounting firms, and you may already aware of what is happening there. But most of the people don't know what's going on in the background, and I will just take you through an example to show you how your taxes work. Now, the first thing you need to understand here is we're talking about a single person individual who earned $57,400 in a year in terms of wages, and we want to find the taxes. And what are the questions that we're going to answer? The first thing is we want to, number A, the tax on base. So I'm going to talk about that. Number B, income over the base. Number C, marginal tax rate. D, tax on income over the base. And then we'll find the total taxes. We also find the after-tax income, and we find the average tax rate of this individual. Okay, so we're going to discuss every one of these topics, and I'll show you what that means. But for now, let's focus on this table. Our tax system works in terms of incremental brackets. Okay, and your tax liability depends on which bracket you are in. If you are in the lower income bracket, you pay less percentage of tax on your income. But if you are in the higher income bracket, your tax goes up. You can see here, like for example, in row number 12, if your income is between $0 and $9,875, okay, your tax rate will be 10%. That's the federal income tax rate. Okay. However, if your income is over $9,875, then you pay 10% on this amount, on the base amount. That becomes the base amount. In anything over that, anything over 9,875, you pay 12% on the remaining balance. Okay, so if you go to row number 13, for example, right here, this, like from the previous, the previous bracket's maximum amount becomes the base of the next bracket. So your base is 9,875. In any income between this amount and 40,125, that is the maximum limit of the next bracket. You will be paying 12% on that difference between the two values. Okay. And similarly, if your income is over $40,000, then 40,125 becomes your base. In any amount, any income that you earn between 40,125 and 85,525, you will be paying 22% on that income. Okay, so that means like it is increasing in chunks. So on the lowest income, you pay 10%. Then in the next, if you go to the next bracket, you pay 12% on the extra income in the next bracket, and then 22% on the next bracket, and then it goes on. So these rates actually, this is what we call the marginal tax rate. Let's suppose that your income is $45,000. So 45,000 means you are in this bracket. And you are in the bracket of 22% tax rate. And this is the marginal tax rate, which means like on any additional dollar that you earn in this bracket, you will be paying 22% tax on that income. So your marginal tax rate is 22%. Similarly, if your income is above 518,400, okay, you are in the 37% tax bracket, which means any income above this amount will be taxed at 37%. All right, now let's look at this situation where we have a person, an individual who earned $57,400 in wages, and we want to find his tax liability. The first thing that we need to do is to remove the standard deductions. Now, some of you might have that idea, but what the government does is that, you earn 57,400, but the government say, well, okay, you know what? Let's take some amount out of that so you don't pay taxes on that amount, and your taxable income is reduced. So there are two things. If you are single person and you're filing individually, you can deduct $12,400 from your wages, and your taxable income becomes the difference between the two. So that is the difference between 57,400 and 12,400. So your taxable income becomes 45,000. Okay. Now, you can also use itemized deductions. And what that means is, like, if you think that if you include like the different items that are tax deductible, and that might be more than 12,400 because you want to reduce your taxable income as much as you can, then you use the itemized deductions. And what are the items that you can use for deductions? For example, you paid some money in charity. You include that. You paid interest expense in your mortgage, okay? Your medical bills, for example, if you paid anything, your taxes, like your property taxes and other taxes that you have paid. So let's say you added all of those items together, and that comes out to be 20,000. Okay. Now you can see that, like, your itemized deductions are 20,000, but if you use the standard deduction, that is you're deducting less amount. So in that case, you would use itemized deduction instead of standard deduction. But if your itemized deductions is, let's suppose if you find that out, it is only 5,000, then you would rather use the standard deduction of 12,400. Now, making it short, your taxable income in this case, we're using standard deduction for this person, that is $45,000. Now, what is the tax base for this person? Now, the tax base is the base income of the tax bracket that this person is in. Now you can see the taxable income is 45,000. Where is that bracket? It is right here. This person is more than 40,125, but less than 85,525. So this person is in this bracket. Okay, and the base income for that bracket is 40,125. Okay, and what is the tax on that base? The tax on that base is 4,617. So we take that amount equal to the base tax on in this bracket. The next item, what is this person's income over the base? We can see he is over the base, but how much over? Of course, what we can do is equal to his taxable income, 45,000, in minus the base income, which is 40,125. So that is in addition to the base income. And the additional income is $4,875. You can see this person is in the 22% tax bracket. He will be paying 22% tax only on this income, which is over the base. So which marginal tax rate applies to this person? Because he is in this bracket, so 22% tax rate is applicable. And that is what we call the marginal tax rate for this person. And what is the tax on the income over the base? The income over the base, as we just calculated, is 4,875, and we are taxing it at 22%. So the total tax on this additional income would be the 4,875 multiplied by 22%. Okay, so he will be paying an additional $1,075.50 income. What will be the total taxes? Of course, the total taxes is his tax on the base, which is 4,617 plus the tax over the base, which is $1,075.50. So the total tax liability is $5,690. All right. If you have any question, please stop me in the middle and ask your question.
Hello, this is Miss Griffin. I had a question.
Oh, sure.
I think you might have answered it, but maybe I might have got confused. Okay, so the person, their income is 45,000, right?
Mm-hmm.
In my mind, I was thinking, okay, the first it's 45,000, right? So I was thinking, like you said, the 45,000 minus the 4125.
Mm-hmm.
The difference of that, I was thinking the difference would be multiplied times the 12% because it's less than it falls into the other bracket. So that's not the case.
No, actually, so what happens right here? Let me take you back. Like this base takes, this has been calculated on the way is like, it has been done for you stepwise. So for your first 9,875, they have calculated the tax, which is $987. For the additional amount over that one in the next bracket, so they have added that, and it is included in the 4,617. So that means like this $4,617.50 includes the 12% tax rate in this bracket and 10% tax rate in this bracket. So this amount already includes the previous tax percentages.
Okay.
So when we use that base, that is already included in there. Thank you for asking that question. Good question. All right. Okay, so what is the after-tax income? Of course, the total income was 45,000, and we just found the total tax liability, which is $5,690. So the after-tax income for this person is $39,310. Now, the next question would be like, even though this person is in the 22% tax bracket, but is he really paying 22% tax? No, actually, because for the previous lower two brackets, this person was paying a lower tax rate. So what is his average tax rate? That would be equal to his total tax liability, which is $5,690, and divided by his taxable income, which is 45,000. If you do that, it comes out to be 12.64%. So on average, this person has paid 12.64% tax, even though the person is actually in the 22% tax bracket. But that 22% means like he is paying 22% on any amount above 40,125. So that concludes the taxes topic. I have oversimplified it for you here, but just wanted to give you a broader, big picture. Okay.
I have a question.
Please.
So based on the taxable income and the calculations you just conducted, does that mean that the total taxes is what he's paying back to the IRS?
Yes, so this is the total amount this person is going to pay to the IRS. Now, if these are wages, for example, some of his wages, some of his taxes have already been withheld by the IRS. Okay, and when you file your taxes, your tax liability comes out to be this. Just imagine that the amount that was being deducted from your paychecks, you have already paid $10,000 in taxes. So you have paid 10,000, but you actually owe 5,690. So in that case, you're gonna get a return of the difference. You have paid 10,000, but you actually owe 5,690. You'll be getting a tax return of $4,310. Okay, but if you have only paid 3,000 in your paychecks, then you owe 2,690 to the IRS, and you'll be sending them a check. Make sense?
Yeah, this make it more clear for me. I'm like, okay, I got it now.
All right, fantastic. If
Excuse
there's
me.
any other, please.
Um, so if I fully understand what you just said, so basically our tax return is basically we get our tax return, it's because we are overcharged by IRS, right?
That's right.
Okay. So I mean, I didn't think it like that way, but yeah, I mean, I'm
Okay,
learning. Thank you so much.
you're welcome. But there are other elements. This is an extremely oversimplified example, right? There are other things. For example, you've got kids. So for every child, the IRS gives you a $2,000 deduction, okay, which is called the child tax benefits. You might have other dependents. So in that case, the story might be different. If you are married, for example, then the standard deduction is, I believe, I don't exactly remember the exact amount, but that is about 24,000. If you are married and you're filing jointly, then in that case, your standard deduction is 24,000, and your taxable income comes down to 33,000, and your tax liability comes down to 3,138. There are lots of things that can be considered. Let's suppose that you are this income is coming from your business, so you can also charge lots of business expenses like your rent, your wages that you pay, your car's depreciation, for example, if you're using your car for your business, also your fuel expense and whatever expense that you incur for the business that can be included in deductors. So there's a lot of things that can be worked out, but the example that I gave you was an oversimplified scenario so that you can understand the broader picture. But yes, thank you for asking the question, and that's how it is. Any other question?
I have none.
Oh, sure. Right, Dwight. No question, Dwight? All
No,
right, so
I don't have any.
okay,
Pretty
great.
interesting.
Okay, so if there's no further question, we will wind the session up here. And next week is Labor Day off, but we are available for questions and solving your issues anytime. Doesn't matter even if it's a Sunday, just let us know and we will be happy to help. All right. So thank you all for joining the class tonight, and I'm looking forward to working with you in the future classes.
Thank you very much,
Thank
Dr.
you.
Shakir.
You're
you.
welcome.
Thank
Take
you.
care and have a good evening.
You too.
You
Have a
too.
good
Take care.
evening, everyone.
Thank you. Bye-bye.
Thank you.
Thank you.